Good afternoon, everyone. My name is John Reardon with Goodfellow Realty, and today is Friday, August 5th, and we are covering the San Diego housing market, state of the market. And let's jump in. We review all the weekly data and serve it up to you to digest. So without further ado, we'll jump in. I listed here a comparison of June 30th to today's date, August 5th, where we are on the market index indicator. And as you can see here, we are going down in numbers. We're currently sitting at just over 60 at 61. And last time this was pulled on June 30th, we were at 78. So cooling off, still a seller's market, but cooling off nonetheless. That will probably come with fewer multiple offer situations, days on market ticking up, fewer buyers out there competing against one another. Here's the real-time market profile. As you can see here, a slight tick down in the median list price, as well as the median price of new listings, down just over 1 million at 1,075,000. Price per square foot also dropping, currently at 672 price per square foot. Average days on market ticking up, now currently at 35 days. Median days on market also ticking up at 21 days. And the number of properties with price decreases is also increasing. So these are price reductions that property sellers are putting in place at 46%. A number of properties with price increases at 4%. Obviously, we would expect that to be very low right now with a softening market. Number of relists remaining fairly flat at 19%. Inventory rising, 927 count thus far. We still need much more inventory on the market to really shift it to a solid buyer's market, but this is a healthy correction currently. Medium rents fairly flat at 3,800, and that days on market, or days, the market action statistic at 61 we covered on the last slide. Moving on, so currently interest rates, a lot of people have been watching the Fed announcements as they increase the Fed funds rate. How does that influence the mortgage interest rates? Well, typically when those rates are raised, typically we expect to see that flow through on mortgage interest rates. The sentiment is that maybe we are finally fighting inflation, although that remains yet to be seen. Few things to point out here. We're currently sitting at 5.24 on the weekly survey from Mortgage Bankers Association for a 30-year fixed mortgage. And if you recall, we did peak at 6.11% back on the week of June 13th. So it'll be interesting to see how that plays out as time continues, if we start to touch new highs or exceed that, or if we're going to be hovering around this mid 5% range. This will also play heavily on the market sentiment, as buyers are maybe getting a little relief right now from the all-time highs. However, as interest rates rise, as you may recall, those price and payments are going to be directly affected. Folks can afford much lesser of a house with a higher interest rate. And so that's going to be very price sensitive in a high price market such as San Diego. Jumping over to the median list price, we are noticing a tick down. We hovered right around that 1.25 range, and now we're starting to see a tick down, now sitting at about 1.2. So we'll be watching this closely, the 7-day average here. This is the average days on market chart. We also noticed a tick up. Now we're sitting at almost 40 days, and that is up from about 20 days back in early August there, or I'm sorry, early April. So no surprise here. We expect this to continue to trend up as more inventory comes on the market and buyers most of the buyers who are not that serious have probably dropped out of the market at this point. Price per square foot, we noticed that drop. So this looks like we hit our ceiling right at around that 700, 715 range, and we're starting to descend down. So currently we're sitting at around that 675 range on the 7-day moving average. Again, we'll pay close attention to this as well. Properties with price decreases. So these are listings that are currently on the market that are experiencing price reductions. So no longer can a seller kind of guess and hope to receive an unimaginable offer that they were hoping to get. The list prices that we're seeing now typically are backed with solid sold comparables in the marketplace. And those that aren't, that are trying to stretch their list price, are becoming realistic with their pricing. And if they are motivated, they're putting in those price reductions, as we are noticing here. So the 7-day moving average shows us about 45, 46% of those homes pushing those price reductions down. So a good sign for buyers. A number of homes, this is homes on the market inventory, current inventory, 7-day moving average floating at around that 7, 8, 900 range there on the 7-day moving average. So good sign. We want to see this inventory continue to tick up levels that we haven't seen in quite a number of years. So we have yet to still cross the 2019 inventory thresholds just yet. But we'll be watching this closely, as this is going to be, along with interest rates, are going to be one of the main drivers of how the market reacts in the next several months, quarters to come. And again, this is the market action index that came in at that 61. We do notice that kind of peak at that 80-ish, 90-ish range not too long ago in April. And now we are sitting at, call it 90-day moving average of about 61. But if you look at the 7-day moving average there, floating right around that 50-ish range. So we'll continue to track this. This is definitely a cooling off that we're seeing, and trying to retreat to a more balanced market, although we are still seeing properties move that are priced right. So still a seller's market. But if you guys have any questions, feel free to reach out to myself. I can be reached at area code 858-309-2826. You can always visit our website as well at homebuysandiego.com. And thanks for watching. Feel free to subscribe to the YouTube channel and like this, as we much appreciate it. Thanks, and we'll talk to you soon.